thinks we need more Bitcoin politicians? Yeah, come on. More Bitcoin politicians. How about a Bitcoin president? Well, coming up next is a fireside chat with one of the biggest Bitcoin advocates that I think we have in Congress in Washington, D.C., fighting for us, fighting for regulatory clarity, and for fair and educated legislation. There are some politicians out there, right, like Elizabeth Warren, who won't even take the time to just hear arguments during congressional hearings, right? And then others who have taken the time to study. And this next speaker is one that has really done the homework, and we're so grateful to have her here at the Bitcoin conference. So, without further delay, Senator Cynthia Lummis of Wyoming, welcome. And she will be interviewed by Marco Santori, Chief Legal Officer of Kraken. Give it up.
Senator Lummis, thank you so much for joining me here, and thank you for joining all of us here. I thank you so much for giving the senator a round of applause, but for such a champion of Bitcoin, for such a champion of decentralized technologies, and for such a champion for all of us, I think she deserves another one. Thank you so much for joining.
Thank you. Thanks.
Senator, I'd like to start off today by talking about your responsible financial innovation bill. Can we talk a little bit about what you hope to achieve, why we're doing it now? I have to say, I think we can all agree that there is a real gap between where Washington is today and where the ecosystem needs it to be today. So can we talk a little bit about the Responsible Financial Innovation Act?
Absolutely. So when I went to the Senate and realized how little was known there about Bitcoin and digital assets, we formed a financial innovation caucus. Senator Kyrsten Sinema and I were the co-chairs. We began to hold information sessions for senators and their staff so we could start to have a dialogue. But then everything went fast forward when the infrastructure bill was brought to the floor of the Senate last summer and contained a definition of broker that was not consistent with how the industry works. And then it became very apparent to us and to all of you that Congress might mess this up. And so we tried to fast forward and craft legislation, even though we would have preferred to do more education for a while, but we didn't have the luxury of that time. So we crafted the legislation. In my office, it's pretty comprehensive, put it out to some of the innovators in the industry in December on a very quiet level, got some fabulous feedback, fabulous. And then just about a month ago, Senator Kirsten Gillibrand of New York, who practiced securities law in New York, and of course comes from this huge financial headquarters state, decided to take an interest in this bill, and she just threw herself into it.
This is terrific.
It's so fabulous. So then, and she has a good staff that's also thrown themselves into it. So the combination of a member of the Senate who is interested and is willing to take a deep dive, plus a staff that can take a deep dive, has made all the difference.
So if this is groundbreaking. I mean, we haven't seen truly significant bipartisan efforts like this come out of Congress on crypto, I don't think ever. So how can you give us an outline of the bill? Maybe just start at a high level and explain what are the issues that you hope to tackle?
Okay. Well, it's truly a legislative framework that we hope will provide the sandbox for innovation to occur, but also put some regulatory parameters so you all know the rules of the road. So it includes definitions. So we all understand we're talking about common things. It includes privacy components, consumer protection components, taxation components. It includes risk parameters, and it utilizes the existing structure at the SEC and the CFTC in order to demarcate where we're dealing with commodities and where we're dealing with securities. So Bitcoin is a commodity. The futures market, the spot market, and the trading will be at the CFTC. And so we want to ramp up the CFTC's capability of dealing with these issues. Then over at the SEC, when things are bundled as a security, they'll be under the auspices of the SEC. And we'll continue to use the Howey test, which has been around since the 1940s, to determine what is a security. Consequently, we are going to see the involvement overlaying this existing structure of some self-regulatory organizations. So we'll go into dialogue, Senator Gillibrand and I, with your industry, so the self-regulatory organizations will interface with the CFTC and the SEC to make this a robust regulatory framework that's able to adapt as things change. And you all know how quickly it's changing. It's just remarkable. You know, what Jack Mallers announced yesterday was just remarkable. Something that a year ago just seemed into the future. So you're innovating so fast, and we're just trying to learn and not put up roadblocks to your abilities to innovate and grow this industry in the United States.
So, as science fiction becomes science fact so quickly in this industry, let's talk about the road ahead. The Howey test has been around for a long time. SEC has been around for a long time. CFTC around for a long time. As things persist in Washington, they tend to entrench themselves, right? They tend to entrench themselves. People begin to rely on these things for their livelihood and for their own successes. Mm-hmm. So you have to expect there's going to be some pushback on the road ahead, right? This is the democratic process. This is part of it. So should we expect that pushback on this bill? Where do you expect it'll come from? Where are the challenges that lie ahead?
There will definitely be pushback. I have thought that the pushback would come from Treasury because I had seen some hostility at Treasury towards digital assets and Bitcoin. Janet Yellen made the most positive statements just this week about Bitcoin and digital assets that I've ever heard her make. And I don't know what the turnaround is there with her, but finally we're hearing some indications that Treasury may be looking differently at Bitcoin and other digital assets than they had during the last year. So that's a good sign.
It's really welcome, right? I mean, this has been a long-going and a long and ongoing struggle between the industry and before anybody was talking about the SEC or the CFTC in this area, we were talking about FinCEN and the U.S. Treasury and their oversight. So to see this kind of turnaround is it's historic. It's historic.
And there are other sources of pullback and pushback that are apt to crop up, and we'll deal with them when they come. It would be helpful to us, to Senator Gillibrand and I, if when you identify areas where you see a growing or emerging threat to our ability to put together this regulatory framework, if you would give us a heads up, because we don't always see what you see. We're trying to generate support in our respective caucuses. I stayed in touch with the White House. I wanted them to know what we were thinking and doing. I've met with Gary Gensler. We've tried to meet with a lot of the regulators. We gave them the bill. We want their feedback too. So I've been trying to be pretty transparent about what we're doing and get good feedback before we introduce the bill. Senator Gillibrand is right now vetting the bill with her constituents in New York. I had hoped that the bill would be filed for introduction this month. We may want to wait just a little bit longer in order to give Senator Gillibrand time to have her constituents vet it. So when we do introduce it, it's had a good thorough scrubbing by the industries. We know that there's going to be pushback. Sometimes we just don't know where it's going to come from.
So, knowing that there'll be pushback and looking back on the last decade of policy interactions between the Bitcoin industry and the broader crypto industry and Washington, certainly where we sit at Kraken, we've been involved in this conversation, but the thing that we've seen start to change the most is the partisanship over these issues, the partisanship over crypto. When the industry writ large started to engage in DC, we seemed better received by those on the right side of the aisle. It was the Republicans that were first welcoming of this new technology and of the industry being built around it. We've started to see that change a little bit. We've started to see some bipartisanship. But it's clearly not there yet. Bitcoin, specifically Bitcoin and crypto broadly, it's still not a bipartisan issue. Do you think we're headed in the right direction, or is this doomed to be a polarized partisan discussion?
I think we're heading in the right direction. I think Senator Gillibrand's willingness to lean into this has just been enormously helpful. Senator Ron Wyden, who is the chairman of the Finance Committee, a huge assignment, very important in the Senate, is very interested, was hugely helpful during the debate over the definition of broker, and we continue to stay in touch with him and his staff about this. We're in touch with Cory Booker. We're in touch with John Hickenlooper. We're in touch with as many Democrats as we can get to engage on this subject. And we want to find the areas of interest that they have, or the areas of concern they have.
Right.
Among the areas of concern is lately, because we're so focused on Russia's invasion of Ukraine, there were concerns about whether Bitcoin and digital asset exchanges would participate in sanctions, and they have, and they've been robust players. We had a fabulous hearing in the Senate Banking Committee, on which I serve, to explain how companies like Chainalysis are able to track transactions in Bitcoin and actually ask the question, if you're investigating a crime or a transfer of monies in fiat currency or in Bitcoin, which would you rather investigate? And without question, they said Bitcoin. And so we want to help convey the message that we can have simultaneously privacy and consumer protection and be able to vet crime committed in digital assets. Furthermore, which was awesome about that hearing, we had a witness who is in Ukraine, and we asked him, would you rather receive help in Bitcoin or in fiat currency? He said, we can have Americans send us Bitcoin today, and we're spending it on medicine, on water, on food, and on protection the next day. We could never do that with fiat currency.
So that is not just a humanitarian point. That is the vision for a real economy developing with Bitcoin, right? It's not just a one-way corridor. It's not just a hodler's paradise. It's not just, a means of saving. This is an actual economy that's developing, and it's developing where people need it most.
Exactly right.
Right, so how long, the Bitcoin community has been pitching this idea of Bitcoin being a boon to those who need it so badly, to those who can't participate in the traditional financial system, to those who are in conflict zones, who can't use banks, who can't use traditional money transmitters. And for so long, it's been just that, right? It's been just pitches. The last month, though, is the first time, I think the first time in history, where we're seeing this at scale being tested in an empirical way. This is an actual empirical test of all of the hopes and dreams of Bitcoiners over the last decade or so. So from where you sit, what do you see happening? Who's using Bitcoin? Is it the good guys or the bad guys?
Well, just like with fiat currency, good guys are using it and bad guys are using it. The good news is the good guys are showing and demonstrating what a force for good it is, how it's so important for freedom, how people in Venezuela people who are in Venezuela in a very repressive regime can preserve wealth and move wealth through Bitcoin, how people who are sending remittances from the United States to their elderly mother in El Salvador can do it faster and cheaper and safer than in fiat currency. Now we're hearing real-world examples, riveting examples. That was riveting testimony of this man in Ukraine. $10 million just went like that. And that money was needed like that. You see how fast this war is changing lives, ruining lives, giving people the ability to fight back. Bitcoin gave them the ability to fight back, to save lives, to send them water and find medicines and buy them immediately. And what we had been hearing in the US Senate prior to that was that it would be used in dark ways, that it would be used by Russians to avoid sanctions. And it helped flip the dialogue when we started seeing what a force for good it is. So finally, members of the Senate, it's hard to pay attention to things that are abstract. And for most members of Congress, this has been abstract for a long time. They didn't have to learn about it because it seemed so futuristic and not particularly front and center with their constituents. That has changed dramatically in the last 12 months, and part of it's thanks to you all.
So let's take a moment and step back. I want to talk about a larger issue that is not limited to just one country. I want to talk about central bank digital currencies. I want to talk about, we can talk about the digital dollar. Boos from the crowd. Let's talk about a digital dollar. There have been a number of different visions for what a digital dollar could be. I suspect that a central bank digital currency is not a monolithic concept, just like crypto is not a monolithic concept. I suspect there could be and possibly will be a variety of formulations of central bank digital currencies, of digital dollars, digital euros, et cetera. How is Congress thinking about this? How are those on the left thinking about it differently than those on the right? What is the temperament on the Hill as to CBDCs at all?
Mm-hmm. Well, not very many people are thinking about it, and for a long time it's been just trying to evaluate the pros and cons. But one of the things that's helping inform the debate is the existence of the digital yuan, because the digital yuan is direct to consumer. It's being used as a tool of surveillance, and the US Senate's aware of that. So, and by the way, the Fed is aware of that. I've had this discussion with Jay Powell. And I think that what may happen is stable coins will be enabled. We discussed stable coins in our bill. Senator Toomey also has a stable coins bill. If there is a digital product that is direct to consumer, it would be a stable coin as opposed to a CDBC direct to consumer. And yeah, I agree. I think that's a much more American way of adopting this technology as backed by a US dollar. So
the prevailing vision then, just to clarify, would be a sort of a wholesale central bank digital currency, yes, that faced banks and central banks, but the digital dollars in our pockets would be a private sector effort, an effort that looks a lot like stable coins today.
Yes, so absolutely right. So as you know, currently the Fed provides US dollars to its Federal Reserve regional banks and to and then they provide it to banks. They also provide US dollars to, like the IMF and the Bank for International Settlements and central banks around the world. That could still be true if we had a CDBC. That would be their audience for faster and cheaper transmission of US dollars. But I think the prevailing wisdom these days in the US Senate anyway is that be the limits of the use of a CDBC, that anything that is direct to consumer would be through a stablecoin type of mechanism that either is FDIC insured issuing, or in our bill we provide for 100% hard asset backed institutions could issue stablecoins.
I think that anybody who is skeptical of the politicization of money would have to share that viewpoint. There's so many ways that a public retail central bank digital currency could become the tool of, well, politics instead of the tool of people. But Senator, this could I would love to keep you here for hours, and there's so much to talk about, but thank you so much for joining us. Please join me in giving the Senator a hand and thanking her for joining us.